travel isn't just about destinations, it's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporates and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the program. Astonishing story developing tonight around the now former Deputy Minister of Trade, Industry and Competition, the DA's Andrew Whitfield, and party politics seems to be all over this. You'll hear him speak for himself in just a moment, but essentially he's made the point this evening that he just does not really understand why he has been removed. Yes, he did travel overseas. Yes, he did visit the United States for DA business. Yes, he did ask for permission. He received no reply, and after following up for 9 days, he just went. Kind of hard to argue with that, really. Also, if the president wasn't happy, he could well have said several things to him rather than going like this. John Stonehage, the DA leader and Minister of Agriculture, raising the stakes a little, I thought, in Parliament, saying essentially the president has 48 hours to act against ANC ministers who've been on the wrong side of things. It's been an absolute mystery to me since 2018 why David Mahlobo, the Deputy Minister of Water Affairs, is still in government when you consider the evidence against him at the Zondo Commission while he was the Minister of State Security. And there was a lot that was happening at the time. But I've never received or never understood any explanation for it. Findings against him at the Zondo Commission. We'll talk about this and focus on this issue in just a moment. It is extraordinary on many levels. The main reason, by the way, that it's so extraordinary is the silence from the presidency. Yes, the president does not legally have to give reasons as to why he hires and fires people, but there is a political consequence for not explaining yourself, and people will fill the void. And in the meantime, Mr. President, sir, I'm afraid that is what we will do. We will try and understand this as rationally as we can. I was spent some time this morning at a big market surveillance conference. It was a launch today of a code of conduct. The idea, I suppose, is to get everybody on kind of the same page. And one of the extraordinary sort of stories is around how some of the people who are involved in manipulating markets, how you can tell when something fraudulent or illicit is going on. What really stood out for me is the presence of sort of state actors in this. And some people involved with some governments are using money to basically manipulate markets. It's extraordinary. You'll hear a bit more about that in a couple of moments and speak to Tony Sear from NASDAQ, actually, the NASDAQ, yes, that one, which is heading to record highs tonight. But it's extraordinary what is going on around the world at the moment. I was just amazed by that. Good to hear from you this evening. 011 883 0702 021 446 0567. You may well have a very different view to me on the Whitfield story, and I'd like to hear it. Voice notes tonight on 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, no public explanation from the presidency tonight on why he's fired the DA's Andrew Whitfield from the DTIC ministry. The DA leader, the Agriculture Minister John Steenhuisen, saying in Parliament today he's giving the president 48 hours to fire ministers like Thembi Simelane, Nobuhle Nkabinda, and David Mahlobo from the executive. He also said, I thought this was a very strong statement, he said this was a direct attack on the DA by the ANC. Andrew Whitfield himself spoke to 702's John Pillman this afternoon.
It is so unbelievable. As I said, I've given I've certainly not given any reason. I've not gone out publicly and leaked information or done anything of that nature. I've genuinely acted in good faith, and maybe that's maybe that was the wrong approach. But I would say that what the president has done, if it is for that reason, which is the only reason, together with the fact that I have been scratching and asking and objecting to issues within the department, It is the only. It seems like a completely unnecessary provocation. It is inconsistent and it is completely disproportionate. Even if you include all the other reasons of being obstructive, allegedly, within the department. To be qualified as insubordinate and for that to be the reason while you've got corrupt accused members of cabinet, you've got members of cabinet who lie to Parliament, but they continue to serve with impunity. In fact, those very members were all provided an opportunity in terms of Audi Alterum Partem. They were given an opportunity to provide a report. I was never given such an opportunity to explain. I was never given an opportunity to engage, and not given any reason for any of the declined travel, and ultimately no reason provided formally for my dismissal.
Andrew Whitfield speaking about an hour ago. Dr. Ralph Mateja is a political and social and economic researcher. Ralph, good evening. I must confess to you, I'm scratching my head a little bit over this. Why would the president fire a DA deputy minister at this particular moment?
Good evening, Stephen. Pleasure chatting to you. I think it is very difficult to explain. I mean, given the possible consequence out of this trade portfolio, it's a very important portfolio. It has also been at, I'll say, at global level as well. We are talking about trade with other possible trade partners, trying to reset trade relations that South Africa has with countries such as the United States. So to come up with a decision such as this affecting that portfolio, it really is difficult to explain. I mean, it's not like the minister has been engaged in some kind of transgression. And knowing that this is a DA minister, I would have imagined the president should have been more, I would say, circumspect when it comes to that. But he did it. It's very difficult to explain. It put a strain on the GNUs.
I mean, the big thing, isn't it, that the president is not explaining why? I mean, I can't see what it would cost him to explain why.
I mean, it is within the president's discretion to make this kind of decision, but he cannot just use his discretion arbitrarily, Stephen. He will have to explain why. I mean, it's a remarkable, it's a significant shift in government, and given that. I mean, this is not a government that is formed by a single party. It's not like the president has an avenue now to go and explain it to his own members of the party. It's about other members of the GNU, the Democratic Alliance here, and other partners as well. They really need to understand what is going on. The president cannot make such kind of a decision without reason, without bothering to explain. And Stephen, imagine, let's go back to how much work it took to put this cabinet together, multi-party cabinet, and the president cannot just exercise his discretion in this way. I think there will be consequence. If I were to speculate, Stephen, I would say the minister has been asking. The deputy minister has been asking difficult questions. The trade and industry battled department as well. They've had to make decisions around national lottery allegations of corruption. It makes no sense to remove someone like that in a moment such as this.
Is this about internal ANC politics? I think there's an ANC NEC meeting perhaps this weekend. There hasn't been one for a very long time. Not everyone in the ANC is happy with the coalition. But even so, it would then be the prospect of the president removing a deputy minister for an alleged travel offence to sort of mollify, to settle down the ANC, and ignoring the higher education minister.
I mean, in this case, Stephen, there isn't what one can call a prima facie case of transgression here. And also, it's about what is not being done on the other side. We're talking about the higher education minister who really, there's been calls that she needs to be removed. But now for the president to be acting in this direction, and it points to pressure within the party, Stephen. And it's going to be very difficult for the president to explain it to the nation. I think it will raise a credibility issue and confidence issue regarding prospects for the GNU going forward.
John Steenhuisen, the DA leader, quite a strong statement from Parliament, I thought, that he's demanding essentially the President act against ANC members in the next 48 hours. Now, the President can't be seen to give in to that. Does the DA then get put in a position where they look weak? And yet, you can imagine Steenhuisen's constituency will be furious.
It's risky to throw in an ultimatum, Stephen, knowing exactly that you might not be able to follow through on that. And I think the DA, a couple of times in the past, they have indicated that this is a deal breaker on the GNU and so forth. I would say the best for them is to ask for an audience with the president and try to get a sense as to what is going on, and to expect that the president will yield to their ultimatum. That is not likely to happen. We know the DA will look weak. I mean, the constituencies you are saying, it's going to look like the DA, maybe they're just happy to be in power. I think people will start talking.
Dr. Ralph Mateja, thank you. Political, social and economic researcher. So many questions about this tonight. Obviously, waiting, in some ways, I think, hoping that the presidency explains itself fairly soon.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Hlelo Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
Well, the launch today of a market surveillance code of conduct at the Investec building in Sandton. Essentially, people in our financial sector have agreed to work against illegal market manipulation in the same way, fraudulent activity, things like that. I spent my morning at the conference and I spoke to Tony Seo. He's the head of regulatory strategy and innovation at NASDAQ. I asked him how the trends of market manipulation were changing.
I think one of the kind of clear trends in market manipulation is the impact of technology, right? So, and in technology, impact manipulation in many different ways. This has impacted everyone's life, right? It's literally changed the way that we trade, right? And if you change the way we trade, it changes the way you manipulate markets. I think there's a couple of trends, right, from a tech perspective that influences. I think one is social media. Right, people trade based upon social media. Social media impacts asset prices. There's so much discussion there, right? And what we've seen is social media being a much larger component of many different market manipulation schemes. I would say the other kind of one that's quite interesting is around digital assets, right? And there is kind of so many kind of different schemes and things like that around digital assets. The regulatory environment is not quite as clear, and I think technology is a part of that, because technology is moving so quickly. There's still a bit of regulatory catch up there. One thing it's kind of I find fascinating on the digital asset side is that just that there's so much innovation with the actual asset class itself. There's so much innovation with how you commit fraud or manipulation on that asset class.
I mean, there's some fascinating examples. I mean, in some cases you've had people linked to states actually being involved in trying to manipulate markets. And what that brings is a level of resource that must make it very difficult. You're talking about people who are putting a lot of resources into this.
I totally agree. I think that the sophistication, right, behind market manipulation schemes is kind of hugely growing. I think on the flip side, the sophistication and capabilities, right, is also growing, right, from regulators, exchanges and platforms. And at NASDAQ ourselves, like we see the challenge growing, and from a kind of both in terms of what we do for ourselves and to monitor our own markets, and the technology that we provide for others to help them monitor their markets, right? We've had to kind of constantly amp up what we're doing. A good example of that is as we introduce artificial intelligence into how we monitor markets. It's a great use case, artificial intelligence. If you think of the fraud problem, we're looking for a needle in a haystack, right? And that's kind of a little minutiae of detail. What's AI going to great for is looking for that needle in the haystack. And these are the types of things we're incorporating.
I mean, obviously, it must be virtually impossible to know how much money is being made, or let me use a better phrase, how much money is being extracted through all of this.
I think it's like really quite tough finding out what it's like saying, well, how large is the shadow economy? Is that type of question, right? But what I think is it's like there's some, and I'm here in South Africa for a conference, right? And one of the really interesting things is just discussing different use cases, right? And it's really interesting kind of looking at how people have caught different types of financial fraud in different marketplaces around the world, right? Kind of sharing those use cases is why we're here. But that kind of like it's like trying to look at cases that have been caught, right? Understanding them, trying to extrapolate from them and kind of seeing how they could impact your own market. There's an interesting case that I was talking about just the other day about how this firm was basically doing market manipulation for hire, right? And literally creating a kind of like a market manipulation service for to manipulate crypto and digital assets, right? Is what they focused upon. But it was kind of very interesting, kind of discussing and learning about that. And that's what's required. The problem's big, but we got to take it one step at a time in terms of how to solve it.
You made the point that a lot of these assets are moving very quickly, and so the way in which people extract money from them is moving very quickly as well. The systems that we have to try and track this, the rate of change for those systems must be immense. They must be having to change at a massive rate now.
Well, it's the key is to stay on top of things, right? I will say kind of one aspect that is kind of really, I feel it has improved over the past few years as a result of the frauds. What we're seeing is that the interconnectedness of the financial markets has really kind of grown over the past 5-20 years, right? As a result, the internationalness of financial fraud has also grown over those years as well, and cases tend to be very complex, multinational. But also as a result of that, what we're seeing is a growing cooperation and use of better practices across nations. And so both in terms of regulators cooperating with each other, and what's best practice, but also in terms of kind of like individual firms, global firms cooperating with each other to say kind of like, how can we do this better, right? That's one of the reasons, like, why is NASDAQ here in South Africa, right? This is one of the reasons why we're here.
That is Tony Seo, Head of Regulatory Strategy and Innovation at NASDAQ.
The Money Show.
The markets.
Graham Kern is at Kerner Perspective. Graham, good evening. A lot's going on today, but platinum simply astonishing. I mean, hovering around $1,400 an ounce.
Yeah, good evening, Stephen. It's quite incredible. I think we were talking a while ago and saying that, capacity had been cut and a small shift in demand could actually really cause a big run. And it's not just platinum, I think palladium as well. So I think that's exactly what we're seeing. So from 950 or whatever to 1,400, that's almost a 50% move. So you would expect the platinum stocks on the JSE to do well. And I think Valterra, previously Amplat, was up over 10%, and Northam and the others also up sort of 8, 7, 6%. So it was a great day. And if these platinum prices hold, then my sense is there's probably more upside to come in these stocks.
I mean, I think what seems to have shifted is the market, to me at least, now has firmly believes that there is a future for platinum, that platinum prices will stay high for quite a while. That wasn't the case when this started.
Yeah, I think the problem was that you kind of had, shifting sands in terms of what was the demand going to be, remembering that, if you take AutoCats, for example, they have historically been a big part of the demand for PGMs. Suddenly you saw maybe an EV coming off the boil with the Trump administration maybe being a little less pro clean energy. And that's, I think, what we were talking about. So, I think it was just the case that, you've seen shafts, if you just take, South African platinum companies or PGMs, shafts coming offline, and that, arguably, if you look into the future, pulling supply out of the market and demand, if it just pops a little bit, then suddenly the market was caught flat-footed. And I think that's exactly what you're seeing now in the PGM market.
In the US, two of the indices knocking on record territory, quite a wild sort of time. Is this sort of fair value? I mean, is there a risk here somewhere?
Yeah, that's the, I suppose the $30 trillion question. If you look at the NASDAQ and the S&P, so when we had the Liberation Day announcements, markets took a right smack. The S&P was in bear territory. And since then, when it was sort of taken off the table and there was a reprieve, markets have basically gone up in, I wouldn't call it a 45-degree line, but almost. And my gut is, and I think most people I chat to are of the opinion that it's hard to find value in the US right now. I think most people are saying if you've got cash, just sit on your hands. There'll obviously be decent earnings growth out of some of those NASDAQ counters, but I think the historic PE is 33 times, on the S&P is 26. We really are primed for perfection, and we had the chat, Stephen, a little while ago about Jamie Dimon sort of saying that maybe the market wasn't factoring all of the risks, and I think that's my view. So it's hard to find bargains in the US market. So, let them go into record territory. I can do it, frankly, without my buying at the moment.
And South Africa, I mean, you look at what's happening in the US and you think, well, why aren't our markets performing in quite the same way, particularly when there's so much overseas exposure? But you still are seeing kind of solid growth, I suppose.
Yeah, well, I mean, if you look at it, it's obviously company specific and sector specific, but yeah, I mean, if you think that, I think the JSE top 40 is on an 11 and a bit PE, so relative to the Nasdaq, it's on the third of that. So, we see good value in a lot of South African equities, and you just take financials where we have a lot of exposure. You're looking at really undemanding ratings, discounts to intrinsic value. If you look at the life companies, for example, you just sort of really feel that the odds are in your favor, and dividend yields are really, really strong. So, frankly, right now, I see better value in SA financials, for example, than I would in US financials. But, yeah, it's... Clearly, our market is small, it's illiquid, and it doesn't really capture the imagination of the global investors. But I think, if you're looking at dividend yields of 7-8% in South African banks, it's a pretty good margin of safety, especially with PEs around 8 times.
Graham Kerner, thanks very much indeed at the Kerner Perspective. Really appreciate it. Just after 6:30.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
WhatsApp Stephen
On 072
702
1702.
Well, of course, WhatsApp's coming through this evening, particularly around the Andrew Whitfield issue, the Deputy DTIC Minister who was fired today.
Evening, Stephen. This is David Nswane. On the comparison between Minister Nkabane, Minister Simelane, and former Deputy Minister Whitfield, I think while the transgressions are, completely different, the difference is that the minor transgression Whitfield is accused of, he has admitted, and has admitted in writing and an apology already. So his side of the story has been heard. There's nothing further to discuss. It's trivial compared to what the two ministers are accused of, but in terms of procedure, I think that's why it's going the way it's going.
Yeah, good evening, Steve, and to your guest there, Tech. I think you guys are being disingenuous at the very least. The first question that you pose is to say, why would you fire a DA minister at this point? Are you trying to suggest that DA ministers must not be fired or relieved of their duties, as it were, because they, in the first instance, serve at the invitation of the president to serve as deputy minister and ministers, everyone there. Now, we never asked reasons why this one, why not that one. We took their names as what's been given to us. Now that someone has been relieved, now you want this and that.
Yeah, it's such an interesting point and such a strong point to put here. The reason that I'm so interested in this is that it is the first time the president has moved against someone who's not from the ANC. And I think the reason I asked the question, frankly, is that it affects the balance of power in the coalition. To put it another way, this action could force the DA to leave the coalition and we could have a change of government. That's why I asked the question. In terms of the previous point around the procedure, the idea that Whitfield had, yes, I keep tripping over the surname too, that Whitfield might actually have sort of admitted to wrongdoing, I don't know if he would put it like that. He did speak to 702's John Perlman earlier. The way he explained it is that, yes, he applied for permission. He asked the president for permission to travel. After 9 days of no response, he said he followed up every day. He decided to go. Then there was no comment when he came back. He then, when he asked for another opportunity to go overseas, that was denied. So he wrote a letter at that point saying, look, if I've made a mistake here, I apologize. But within all of this, and I must just make this point, I'm afraid, the president has not commented to Whitfield at all. If there is an issue, say so. And to ask for permission and receive nothing for 9 days. I think that's a bit rude, frankly. And I realize the president's a busy person, but there must be people who handle all of this. There must be ways to handle it. It seems to me bizarre that people in government are treating each other in that way. There's also a WhatsApp message coming through this evening on 072 702 1702 saying, SG, as a journalist, you witnessed members who are deputy ministers being fired. What is different with this DA guy? I remember particularly, and I've been reminded today of the Deputy Health Minister in 2007, I think it was, Nosizo Madlala Rutledge, who essentially was fired because she disagreed with then President Thabo Mbeki's policies on HIV/AIDS. It was a massive story at the time. There's sort of resonances for me with this. They're slightly different, but there are some resonances.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Hlelo Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Well, the Bonitas Medical Fund releasing its annual report today, saying in their financial year to the end of December, their total number of beneficiaries went up by just 16,000 people to nearly 732,000. Their principal members are now around 359,000. They do have 9 billion rand in insurance reserves. The chief financial officer at Bonitas is Vorhongo Rikotso. Vorhongo, good evening, and I do appreciate the time. Our medical aid industry is very highly concentrated. 3 institutions pretty much dominate the market. Your press release was, I hope you don't mind me saying so, a little excited about the increase in your membership. It's up, I think, by around 2%. Is it quite difficult to get new members in this environment?
Good evening, Stephen, and thank you for having me. Yes, definitely it is a difficult environment to get new members, especially considering what is happening in the economy with the high unemployment rate. You would then find that it's a challenge to attract the young member that you would ideally want on coming onto the medical aid, because with a young member, you then have a nice balance of the risk between the older member and the younger member. So definitely the economic pressures are creating a lot of pressure also for medical aids to actually get members. So we're basically fighting for the same employed member as the different medical aids.
How are you feeling about the balance between sort of older and younger members? And this is how most medical aids fund themselves. You need younger, healthier people to balance out older people who are not as healthy as they used to be.
Yes. So if you were to look at our results, we are still looking quite good when it comes to our beneficiary age. We're sitting at 35.9 as an average age, which means we've got a good mix of the young and the old. Obviously, what we're also seeing, though, as a new trend is that the young are also prone to chronic diseases. So the young member doesn't always necessarily mean that they're also coming in healthy, which then also poses a new challenge or a new risk for medical aids. But that if you look at where we are at currently, we still have quite a good balance between the two.
The NHI, the fact it may come in all of the noise around it one way or another, I think we're still a few court cases away from a final determination. Is that a factor in decisions people are making about medical aid, do you think? Or do you think they don't factor it in at all?
I think it's still a little bit too early, Stephen, for members to factor it in. What we've done within Bonitas is to try and educate the member as the developments continue. Obviously, as Bonitas, we do support the concept of universal health care. However, in terms of making sure that the member understands the development, it's important because there's still a lot of uncertainty, as you've indicated. So I think it's still a little bit early days for the member to worry. And what the board and the executive team is also currently doing is also trying to make sure that we're always abreast of what is happening so that we make strategic decisions that will benefit the member.
You recovered over 46 million rand from fraud, waste and abuse. I mean, in some countries, medical aid fraud or HMO fraud's a major industry, right? How bad is it for you? I mean, how much medical aid fraud are you dealing with? Clearly a lot.
It is a lot, and I think the challenge that we're also getting is that the fraudsters, if I can call them that, are also becoming smarter. So we have to find ways of making sure that we recover these fraudulent claims in a more innovative way, if I can say it that way. But if you look at where we're at in 2024, we managed to recover the 46.2 million, and in 2023 we actually managed to recover 52.3 million. So that is also something that then is encouraging, that we can still recover something. And I think also the providers that are doing all these fraudulent acts are then also realizing that we are out there to make sure that we collect all that is due to us.
Medical aids, particularly medical aids of your size, are really useful because you can look at the data, look at the claims, look at some of the trends in society, and consistently since the start of the pandemic, we've seen medical aids and private healthcare companies reporting a big increase in the number of mental health cases and claims. Are you still seeing that? Mental health still a big issue?
Yes, definitely. That is a growing trend that we're still seeing in 2025. It's actually one of our leading claims. And it's something that we are also, as we are looking at growing our corporate strategy, attracting more corporates onto the scheme, it's something that we're highlighting to the corporates, because what we're also seeing is that these mental health cases are also linked to the working environment or where it's work-related issues. So we're seeing more and more people actually being admitted for mental health issues.
A medical aid scheme of your size, when you're competing against, I mean, we all know which is the big one that you compete against. It must be quite tricky in a way to just sort of punch through some of the noise. And so many people talk about trying to make our medical aid systems slightly different or to make them more equal or things like that. But you're still in a kind of slightly complicated position. You do have to fight quite hard, I imagine.
I think if you look at the growth that we've been seeing, as you indicated, we have grown by 8,000 members in the previous, in 2024, and we're still seeing that growth, which shows that we are still adding value to the market. I think what is important to us is to ensure that we still remain the medical aid for South Africa, remain affordable, and how we're doing that is through the different options that we have. We've got 15 different options, and those cater for the different LSMs. So that then ensures that we don't limit ourselves to one type of member, but we have different members depending on their affordability too.
Verhonga Rikotso, thanks very much indeed. Chief Financial Officer at Bonitas.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Hlelo Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702. Stephen is on the Money Show.
6 to 8 p.m.
Well, while we don't have load shedding at the moment, one of our major challenges as a country is dealing with transmission lines. So on one level, it's relatively easy, I mean, as strange as it may sound, to invest in more generation capacity. It's all in one place, right? Or a lot of it is in sort of one place. But to move the stuff around, to move electricity around from where it's very windy to where there's a lot of sunlight to the cities is a major difficulty. Keith Webb is the infrastructure finance sector lead at RMB. Keith, good evening. We need nearly R500 billion to do this properly. How involved have you been in these projects? I mean, presumably you've been knocking on doors looking for projects to finance, and I imagine in many cases those doors have been opened.
Yeah, good evening, Stephen, and to your listeners as well. So the numbers are huge. I mean, as you say, R500 billion over the next 10 years to modernize our grid. It's still in its fairly early stages. I mean, there are multiple ways to actually deliver that, and not least of all, obviously, we have now the National Transmission Company of South Africa that's been set up as a separate entity to Eskom, still wholly owned by Eskom, but certainly set up to focus on rolling out and managing this grid. Secondly, what we're finding is a lot of the generators are actually leaning in substantially. So all these independent power producers are leaning in and investing in their grid connections as much as they can. And then the third element that's certainly very exciting for us and is a new initiative launched by government, by the Department of Energy, is the Independent Transmission Program. So that was launched a month or so ago. It looks to be the first package around 1,100 kilometers of transmission line, to unlock around 3,000 megawatts of transmission capacity. And that certainly is a very big first step and very exciting for us.
These projects, so you put money in. How much oversight do you get? I mean, it's intensely complicated. You need servitudes. You need permission to run power lines over communally owned land or farmland or mine land in some cases. Someone's got to actually put the thing up. How much oversight do you get to have? I presume quite a lot of it's your money.
Well, initially, the program is set up, the ITP program and generally is set up so that the servitudes are provided as part of the bid package. These sort of risks are not really ones that private sector can take. So the program, the ITP program, is very much anticipated to be what we call a late stage tender. So a lot of those pre-approvals will be part of the bid package. And I guess the reason for that, you can imagine a lot of land access, one involves government, but also involves, some of the very politically sensitive things around expropriation or access to land, if it's in open land or in the municipalities' rights of ways and engaging with the munis. In general, not only in the ITP program, but generally in engaging with the NTCSA, these are the things that slow down the rollout of the grid, is just trying to get access to land. All you need is one farmer, one municipality on a route to block that route, and one's got to find other ways around. That takes a lot of time.
We talk about R500 billion over 10 years. These things move quickly and sometimes slowly at the same time. Is it really going to be that much? I mean, I can see two different ways in which this could change. The one is that just over time, the costs go up because the costs just go up. That's what normally happens. But technology changes too. So maybe that won't happen this time. Is it still going to really take 10 years? There are quite a lot of variables to all of this.
Well, we're trying to make sure that we speed up the investment. So that we front load that as much as possible. I mean, the country or the NTCSA runs a fairly well established transmission development plan, which plots out over the 10 years how this is going to be rolled out. It tends to be more back ended. We would prefer it to be more front ended because we see the need. But as I say, all these things take time to get in place. So, finding multiple levers to actually achieve this objective, this R500 billion is important. The actual number, will change over time, I guess, and, we'll see how the grid develops and exactly where that investment is needed, initially to unlock the most. And as you say, over time, there might be other ways to be more efficient, with all technology coming out. Around operating grids a bit more efficiently, one might find efficiency in that. So let's see how it goes. But it's a nice big number to target.
hopefully we don't need to spend all of that to get the same result. But for now, it's a case of calling all pockets, start your engines, let's all get involved.
Keith Webb, thanks so much. Infrastructure Finance Sector Lead at RMB. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025. So a lot to come in the next little while. We'll talk about how AI has been ripping off journalism. Everyone rips off journalism in the next couple of moments. Siphumelele Zondi on standby to talk to you about that. In small business, we'll be talking about managing money. How difficult that can be. Investment School this evening. One of the great debates in investment is active versus passive. In other words, do you go through the whole market, or do you actually have active investing? It does seem there are lots of different ways to see it, but a suggestion that, in fact, the distinction between active and passive may be falling away just a little bit. If it does, what will we fight about?
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, a series of comments in a report from News 24 around the Finance Minister Enoch Godongwana today. He was asking the PIC to do a proper review of its unlisted portfolio. It's a fair amount of money, actually, which is money that they've invested in sort of non-JSE listed companies. And I think the main reason for this has been the utter disaster, train wreck, in slow motion that has been Daybreak. And I mean, as the shareholder, as the owner, the PIC, and you've heard other people say it's been sort of negligent. Hard to disagree with that actual characterization, because they sort of allowed it to happen when clearly some members of the board were really not acting in the best interest of the company or anyone else except themselves. I mean, one sort of was demanding a bonus, got it and left, while workers hadn't been paid. I mean, just astonishing. So I'll be very interested to see where this goes, but I think that the unlisted portfolio of the PIC is always going to be controversial unless the PIC is a bit more transparent. I mean, I hate to go back to it, but it's a bit like the Whitfield issue. One of the reasons there is such a big fight about it is because the presidency is taking the view that it doesn't have to explain things that may legally be true. There'll be a political cost to it.
702. Stephen is on X.
At Stephen Grootes.
Well, a couple of cases emerging in the US in which judges have ruled on the side of big tech. They've been training artificial intelligence models from books, and that brings to copyright issues. So in one case, authors said they had taken Meta to court. They say the company trained its AI on their work without permission. In another, the Center for Investigative Reporting is going after OpenAI. They use journalism to train models like ChatGPT. Siphumelele Zondi is our tech expert. Siphumelele, good evening. What kind of issues did the authors bring here? And I mean, it's one thing to publish something, put it in the public domain, as it were. You do still have some rights over it.
Hello, Stephen, and thanks very much for having me again. So in these instances, there are similarities, right? It copyrights its training of big language models and basically using information that's downloaded from third parties like books, for example, in two of the cases where rulings were made this week. You also spoke about journalism in your intro there as well. So it's basically that type of training where information is authored by other people. That information is then taken and used by these AI training companies, Llama being one, and Claude being the other, which was developed by Anthropic, and the usage basically of information they didn't create, information that's been created by other people to train their models.
So, I mean, the ruling then seems to have gone in favor of the AI tech companies. Basically, you can do this.
Yeah, well, yes, two of the cases, both the Llama case and the Anthropic case, where the ruling actually came out a couple of hours ago in one of the cases. And yes, so it's gone in the direction of big tech, where one of the judges said, yes, it can be used. So there actually were similarities in the ruling, but in terms of what the judges then said in their ruling, there were slight differences. In the Llama case, the judge said that it's the plaintiffs that failed to convince the judge, or they went after the wrong thing. And the judge actually did say there that it's actually wrong to use information created by other people to train AI, but that's not what they were arguing. And the judge said they were arguing on the proliferation of the internet with the information they didn't create, because these AI models would then spread the information across the internet. The judge there said, had you gone for the infringement in terms of you download the information and you use it, then maybe it could have gone in your direction. And the judge then said, if that doesn't then stop, it doesn't stop other people, other authors of bringing their own cases to be heard in court and going after that copyright infringement aspect in particular. Whereas in the other case, the Anthropic case, the judge there said it's not illegal to use third-party creations or authored works to train AI models. What is wrong that would have happened here was how the information was gathered. The fact, and they said that they used pirate sites in order to download these books. They didn't go to the authors to ask for permission. They said they then need to go to the authors directly to ask for permission.
I mean, authors' books are usually published by people who own the copyright. You know, there's a publisher. They'll go after you if you photocopy it and distribute it. It's astonishing they were using pirate sites. I mean, it's crazy. Okay, so does this mean then that if I write something and publish it in some way, shape or form, people can use it to train their AI robot, and I wish them luck?
Well, you see, that's where the confusion is, because one judge said yes, that can happen. It's just that it's how they go and gather that information. They need to go to the author. The author owns the copyright, and the author needs to say yes. And the one judge said no, they shouldn't. So it needs to be tested a lot more. And I suppose that each different territory is going to have its own rules where these AI models are being created and training and being trained rather. So what I suspect is that in the end, we're going to have a situation where they're going to be asked to go and get permission granted, or even buy that information from the original authors in order for them to then start training their models. Because right now they've been getting it for free from wherever they're getting it from on the internet, including pirate sites, as we're hearing.
The Centre for Investigative Reporting, what did they want in their case? And this will be more about journalism.
So that's more about open AI, right? In terms of the legality of the information that, again, similar cases, journalists create the work and that work ends up online and then they take the work, and when you then go and use their platforms, you find the work or you find the information for free without the journalist making any money from it, or without the company that published the work making any money from it. It sort of goes back to, I suppose, what social media companies as well as the search engine Google got into trouble for in a number of territories, because it was for similar things, right, in terms of those search engines and those search engines basically finding information that's been uploaded online and then making it freely available for their audiences, and money not trickling down to the newsroom or to the journalists. Something similar here with AI models as well, where anyone can go and look for information. It summarizes the information for you a lot of the time, and then it tells you where it found the information sometimes, but the money doesn't trickle down to the journalists. It doesn't trickle down to the newsroom. So it's sort of like similar in terms of authorship, but basically them not getting the value for the information they created and they published in order for them for that information to be available on this AI platform.
Siphumelele Zondi, thanks so much. Our tech expert. Fascinating to watch this develop.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Hlelo Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702. Stephen is on The Money Show.
6 to 8 p.m.
Small business focus. Bulelani Balabala is a business speaker and township entrepreneur. He's wearing his Get Things Done cap as always. Bulelani, how's it? Money management for township entrepreneurs. It's a major issue. I mean, it's an issue for all of us, but particularly for people in the entrepreneurial space.
No, definitely. I mean, it definitely is, and I think it sort of rears his head, especially when a business owner, thinks of his business as an ATM as opposed to an actual business in itself. And I think it's because, and to a degree, that these statements that we make that says "I am the business," but forgetting the fact that the business is its own legal entity. And I think being able to start to understand how to manage the money is to be able to first separate yourself from the business so that you are able to appreciate what you're actually trying to achieve, number one, as an individual, but also in the business, and then starting to develop your own personal money psychology.
How do you separate yourself from the business financially? Do you give yourself a salary no matter what? Do you do something else?
No, man, I think the first thing, I think you sort of touched on it, right? The first thing that you definitely need to do is you need to give yourself a salary. But guys, to any small business that is out there, if you want to continue being invisible to funders, DFIs, grant-based institutions, is continue to spend your business card at every mall, at every fast food joint, because you make it invincible. It becomes very difficult for a funder who wants to fund you to be able to separate, is this a serious business owner? So one of the first things that you need to do is that create separate business bank accounts. And then over and above creating the separate business bank accounts, be able to allocate a certain amount to spend towards yourself as a salary. And I think some of the basic things that you can do is look at how much you spend for your own personal needs, whatever that amount is, whether it's 500 Rand, 1,000 Rand, or 3,000 or 5,000 Rand, set it aside so that you are not swiping away at fast food joints through your business account.
You also need to save for growth, right?
Yes.
So you need to be able to invest. And that can be tough because when a business starts, I mean, often you get the first, you get the sort of first customer, hooray, and now it's quite a long drought before the second one. So how do you go around doing that?
I mean, definitely. I mean, saving puts you in a great position. But I think for me, it's a couple of ways I want to tackle this particular one, especially for small business owners, right? I think think of saving. Part of the savings journey is to be able to analyze and unpack. Are you pricing your product correctly? Because in most cases, you find that we don't have enough meat left on the bone purely because we're not, or rather fat on the meat because we're not pricing correctly, right? And your pricing methodology can't simply be the cost of the product plus your profit means that that's how much you actually make. There are other factors that you then need to take into consideration, primarily the cost of the electricity, the water, and all other sort of hidden costs that go into the development of that particular product. And could you potentially then work in the marketing cost of actually marketing the product out into the market so that when you make money in, it doesn't frustrate the actual foreseeable profit that you are thinking of making within that particular product. Then the second thing that you then do in peeling off the layers is to say, how do I reinvest this money in the business in a responsible manner so that you are able to then grow and scale your sales at the end of the day? That then creates the environment or the natural environment within your business where now you accumulate enough money to be able to have money for rainy days. Because you talk to a number of small business owners and say, but how do I save the nothing that I have? Well, let's start to grow the nothing that you have into something and then be responsible and disciplined enough to start to put it away for rainy days, for growth and machinery and equipment breakage.
You always mention that cash flow is the kind of heartbeat, right? You've got to be able to track it. And there are lots of different ways to do it. I always find when I look at a spreadsheet, I mean, I've never really worked with spreadsheets, so I have no idea what's going on. It's a different language to me. But you do need to be able to stay on top of that. How do you go about doing that?
No, it's impossible. I almost said it's impossible. Because that's exactly how it felt. I think when I sat across my accountant 12 years ago and he looked at me and he showed me, I think we're going through our financials at the time, he was showing me how much we had made for the year. And my first question to him was, where's the money?
Yeah.
Because it's not in my bank account, right? It's great numbers.
Yeah,
because it's great numbers. But so I think for me, going through your finances can be daunting. But I think for me, the most important thing that you need to do, the first two things that you need to understand is what are your costs? What are your fixed and your variable costs, guys? And I think your fixed costs are like your rental, your cell phone account, those costs that never change, doesn't matter whatever the season, apart from the yearly CPI increases, right? The second cost is your second cost are your variable costs. If you spend fuel this month, if you didn't drive, then it drops. What are all those variable costs? And then once you then do that tally, write them down on a piece of paper. And then on the other side of the book, write down all the whatever your sales are or your income is. Because when the moment you get a good depth in terms of what you're spending money on and where the money is going, you can start to hold yourself accountable. Because the biggest challenge, especially in the small business owners, sometimes that I've experienced is that it's only after when they realize the cost of how much they've spent collectively when they add it up. But that's normally when it's too late. So start doing that on a consistent basis, whether it's a bi-monthly or on a monthly basis, so that you hold yourself accountable to how you are spending your money. Or rather, the business's money.
If you manage your money properly, if you've got strong financial management, what does that say to possible funders?
No, man. I mean, if you've got, let me tell you this, Stephen. If you're managing your money well, it shows itself in the demonstration of your business. Number one, you might have a business that is not profitable. Maybe you're breaking even. Maybe you're making a loss. But if you are able to demonstrate proper financial controls within your business, the fact that you're reinvesting the little that you have in the growth of your business and being able to articulate this to a funder through the hiring of new skilled employees, the new machinery and equipment, or even your deal flow, your deal pipeline, shows yourself in the great and positive light. And I think this particular discipline is very, very important, primarily because you can't scale and grow your business if the financial health of your business is not in the right standing. So we then ordinarily sometimes think that, you know what, the only time I'll have the right sort of financial systems and controls in place is when my business is making a certain amount of money. No, you start now so that you build it in as a habit, because the biggest challenge is that you'll make 100 million, but it's going to fly over your heads because you don't have the right sort of controls in place.
Are there mistakes you keep seeing people make time and time again, township entrepreneurs, things that you can just see, this is going to happen again?
I mean, there's a few, but I think, the 3 or 4 that I've noted down is definitely spending everything that comes in and not reinvesting. That's the first one. I think over and above the spending everything that you make and not reinvesting, the other one really in and around there is that spending sporadically. On whatever you think is the latest innovation, as opposed to sussing out, is there someone in my space, in my community, in my network who already has this machines or equipment or even the skill that I might not necessarily be liable to pay them on the monthly fee, whereas I only need them for 2 days. The second one is running the business on memory and not records. Guys, we can't do this, right? You need to be able to run the business on record. And then the last one is not pricing the product correctly. I mean, I sort of spoke about it, but this then becomes the coffin, because this becomes the nail in the coffin for a lot of businesses. Because in most cases, not that the business idea is not great. It's not that the product is not great. Sometimes it's because you're not pricing it correctly. And that in itself is a form of financial mismanagement to the business itself.
Bulelani, so good to see you, getting things done as always. Thanks so much. Bulelani Balabala is a business speaker and township entrepreneur.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
The Money Show.
Investment School.
The Investment School is brought to you by CFI, a leading global trading platform now available in South Africa. CFI Financial is an authorized financial services provider. One of the great debates in investing, and we have touched on it before in Investment School, is the sometimes furious battle between active and passive investing. I mean, they all shake hands afterwards, but only because I make them. But now there's a suggestion that, in fact, there's a little bit of a difference in how we understand this, that maybe the distinction is not quite as big and other things are coming along. So much is changing in investments at the moment, as you know. With us this evening, Hlelo Giyose, the Chief Investment Officer and Principal at First Avenue Investment Management, and a newcomer to Investment School, François Smith, is a client portfolio analyst at Stonehage Fleming Investment Management. Gentlemen, good evening to you both, and thanks so much for coming in on what I think is going to be a chilly night. François, if I may just start with you, some definitions, please. So passive investing is not lying down. Passive investing is putting money across a whole index, right? How is it different from active investing?
So passive investing in its most traditional form is when a particular passive provider attempts to mimic traditionally a cap-weighted index by simply buying and holding all of its constituents, whereas an active manager on the other hand, they go and attempt to identify good securities beforehand, and then they collate a portfolio with the promise of potentially outperforming the market in which they're investing.
So you could either buy the JSE All Share, that would be passive, or you could buy Capitec, that would be active.
Well, essentially, yes, yeah.
Okay. Hlelo, I mean, this argument, this debate has been around for a long time. Is it possible to know who's better? And a lot of people point to passive investors as having a better track record over time.
Well, if we could just be a little bit more nuanced about active versus
We
passive.
don't like nuance.
Right? The minute you walk away, the minute you step away, even by an ounce from mimicking the index as it is, the minute you step away and say, I'm going to replicate the index on an equal weighted basis, or I'm going to mimic it on any other basis, you are active. Right? The minute you do that, and you because you will receive an outcome that is different from that of the benchmark. And the rationale would be, I'm doing this because I believe I can outperform the index, okay, by making this one nuanced change. Okay, so now here comes the argument is that the vast majority of active managers, if you look at it over a long period of time, underperform the index. I think there's a statistic that says only 10% or up to 15% of managers outperform the index over, say, a 5-year period plus, right? And so whether or not it's cheap or expensive, or what, the point is the prospect of not beating the market is lower the minute you walk away from the index. So better stay with the index. You pay less. Maybe you don't get some of those spectacular returns like Warren Buffett. But what are the chances? Because you stand the chance of missing you can't pick the guy who beats the market. It's difficult. It's like a lottery.
François, you've recently put together an article about this, and you talk about costs.
Yes.
And you suggest that costs are actually king, and it is cheaper to invest passively than actively. Why are costs so important if there is a possibility of outperforming the market?
Well, investing is inherently an uncertain endeavor, and costs are a part of it that is certain. So if you are a client looking to collate a portfolio, it is something to be very conscious of. It is one of the deterministic components that can actually be controlled. So it is truly important.
You suggest that in fact cheaper funds tend to outperform more expensive ones. That makes no sense to me, I have to tell you. Why is that?
Well, it all comes down to being able to pass through the performance and expertise of the manager, whether it's an active manager, a semi-active manager, or someone exactly as you've just pointed out, someone who inherently departs even slightly from the cap-weighted index. It comes down to being able to pass that outperformance on to the customer. And that is really where the value lies. That is the promise. Being able to get that excess performance into your investors' hands.
Hlelo, I'm interested in that. If cheaper funds were always, if the cheaper ways to invest always outperform the more expensive ones, how do the expensive ones even survive?
Yeah, because when the expensive ones, well, let's put it this way. When a manager can outperform the benchmark, right, the index or the market, it's worth it. It's worth $1 billion. So a good example is you pay a premium for the opportunity that maybe the guy you've chosen is Warren Buffett. Okay, that's worth a lot. Maybe the guy you've chosen is Phil Fisher. Maybe the guy you've chosen is one of the greats, right? And there are all these people around the world. Now, they're not as many as there are funds, but you pay a premium for that prospect because when you do get it right, the outcome is completely outstanding by a country mile. It outperforms the market by an order of magnitude you would never have imagined. But you pay for that right up front. You pay for that chance.
There's so few of these people, it seems, around the world. So presumably they make quite a lot of money when they do it, obviously.
Of course they do.
But at the same time, it just raises the level of risk to get involved in this. And over time, technological change might well have an impact on, who is able to actually actively manage a market in that way.
No. I think you misunderstand, Stephen. It's no different from record companies. Record companies, how many artists out there have record deals? And how many artists out there ever become top-selling artists? 1% of artists actually occupy most of the playtime in a radio station. But radio stations pay the artists to take that chance that they'll get the next Michael Jackson, the next Beyonce. Why is it any different for asset management?
Makes a lot of sense when you put it like that. Francois, are active and passive, and I sort of started off by saying that there might be a little bit of a breakdown in the definition, that it's a bit more nuanced than it used to be or different. How has it changed?
Well, it's exactly as he's alluded to
Hlelo
before.
saying, yeah.
As soon as you depart from the traditional cap-weighted indexing strategy, you are inherently making an active decision. And what's really interesting is that your passive providers are more and more giving exposure to very niche and unique corners of the market, different weighting methodologies, different styles, different strategies, and that in itself is an active decision. So what essentially is happening, that even if you are picking a passive product, you are making an active decision to have an exposure to a part of the market that you potentially believe is going to do better than the overall market.
Okay, so are we seeing the sort of old-fashioned sort of differences between the two breaking down a little bit? I mean, is there a different way? Are we looking at the market in a way that's slightly different from where we were 10, 15 years ago?
I think when one considers the active versus passive debate, people view it in a dichotomous lens, and I think that is both limiting and contentious. Because I believe that having passive exposure gives you low-cost, cheap market participation, and you also, and by incorporating active bets in your portfolio, you are allowing for the prospect of potential outperformance of that market. Getting it right is exceptionally difficult, but being nihilistic and not allowing for the possibility, I think, is limiting yourself and your portfolio.
Hlelo, I mean, the idea that people are active, does that mean that they're actually as active as they sound? I mean, when you talk about an active asset manager, I have a sense of them doing something every day. Presumably they're not, changing what I've invested with them every day. I mean, I presume they're not as active as all that. They're taking in a lot of information every day, probably.
Yeah, and there are grades of being active. There, at the extreme, we have what they call day traders, who never go to bed without closing a position, right? And then there are the extreme, like such as Warren Buffett, who can hold a position since 1950, as he did in Geico, 1950 till today.
Sure.
Right? So these are two extremes. But I have to tell you that I think when you are an investor, you want to put your money into the stock market, you really should consider yourself as someone who's buying a hybrid car, part electric battery and part petrol, right? The electric battery is a passive part. It's cheap. The petrol is an active part. You have to pay the oil price as it goes up and down, right? You blend the two to get, on average, a lower price, or a lower cost of energy than had you just gone fully active, right? Both have a role. There's some markets, I think, if you want to buy cash, why get an active manager just to invest in cash? That you can do passive. Some people feel that way about bonds. That you can do passive. Now with equity, where you stand the chance of getting exceptional outcomes, where you also have to pay sometimes an exceptional amount of money to participate in that, that's your petrol, right? That's where you get more octane.
That's such a useful way to explain it.
Yeah.
So then, okay, we see that traditional categories are blurring, Francois. I mean, presumably this is going to continue. I mean, that blurring is, the whole way in which we look at this is going to continue to change.
Yeah, I think so. I think the market will never reach a point where there's complete polarity towards the one side or the other, because active managers have to do research, and they have to get into parts of the market that is unique, and in doing so they keep the market relatively efficient. Passive providers rely on that to provide low-cost markets that are relatively efficient. And as soon as the markets are perceived to be inefficient, active managers will jump in and they'll try to exploit those opportunities. So saying that, well, passive is the only solution forever and ever, amen, I don't think that is the way to go. And I don't think the other side of the coin is any different.
We're speaking to Hlelo Giyose, the Chief Investment Officer and Principal at First Avenue Investment Management, and François Smith, Client Portfolio Analyst at Stonehage Fleming Investment Management this evening. Investment School, passive and active, how they're changing, will continue in a moment.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Hlelo Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show.
Investment School.
Speaking to François Smith, the Client Portfolio Analyst at Stonehage Fleming Investment Management, and Hlelo Giyose, Chief Investment Officer Principal at First Avenue Investment Management, talking about active and passive investing, how those categories are changing slightly. François, let's talk a little bit about private markets. I mean, that's quite a little bit of a different animal and would appear to require active management.
Oh, most definitely are. So if you look at the definition of private markets, or passive investing rather, you typically have to mimic an index. And in private markets, that is rarely available. And if they're available, they're typically not investable. So you kind of forced into a position where you have to be active. You have to make active decisions. But because of this, it is a little bit of a blind pool, and it's difficult to navigate what really is going on underneath the surface. So if you want to incorporate private assets into your portfolio, you really have to partner with someone who is well-versed in the space, make use of a high degree of due diligence, make use of a well-developed vintage program like those we've developed at Stonehage, and really...
Sorry, what's a vintage program?
A vintage program. So this is a pool or a collection of investment programs that are stratified over a number of years that help give you steady participation and payoffs in a particular set of private market investments. So you want to partner with someone who has that ability to really look under the hood and to make sure that the dark pool becomes cleared up a little bit, and to incorporate it in your portfolio in a manner that is appropriate for your risk profile.
All right, so you basically need to give it quite a lot of attention if you're going to play in that space.
Very much, and that's where the value of active management comes in.
You just pay the one oak, yes. and you hope she does well. Hlelo, when we talk about passive investment, corporate governance comes into play a little bit, because there's no kind of, you don't really have direct oversight over what's going on.
Right. I mean, the argument in passive investing is that the markets are efficient. No need to value a company, no need to try to buy and sell. Let the markets act as they are, because there's no new information. Everything is well known. Well, the problem is, we need to appoint a new chairman of the board. We need to have good governance structures in the audit committee. We need to make sure that there's no forensic accounting fraud. We need to, well, then who's going to police that? Because that's what active managers do. They take proxy forms and they vote for directors. They're active shareholders. They choose how much, they vote on how much board directors get paid, management teams get paid, and so on. So that's not perfect, right? The active argument falls flat when it comes to corporate governance.
Okay, so I mean, in that case, you really need someone who's actually thinking about it, watching it incredibly closely. Yeah. I mean, and it just sort of reminds me strangely of, the movie The Big Short. You would have, if you'd been monitoring the market then, you would have lost a ton of money. If you had some of your high octane from your petrol engine, you might have made some money.
And you wouldn't have caught, if you're passive, you wouldn't have caught Marcus Juster from Steinhoff.
Yeah.
Right? There's no, right? If you cared about like gender diversity on the board, well, no one votes for that. Who gives a hoot for that?
Yeah, it's very interesting to see how this plays. Francois, so the way that markets move, they seem to be moving a lot more quickly, by which I mean, and we certainly see it now, if you have any bad news at all on the JSE, you're getting smacked. If you have any good news, you're getting celebrated. But there's also sort of algorithmic trading, things moving very, very quickly. Does that change any of this at all? I would imagine active managers need to put a lot more effort into what they're doing. They need to be up to the minute. I've managed to get this far in a conversation on the Money Show without using the letter A followed by the letter I. And that would probably mean that the cost of active management might start to go up a little bit. A lot more brain power is going into it.
Well, yes and no. Yes, if you really need to expend a lot of energy and a lot of time to do the work, that is definitely going to be the case. But I think generally across the industry, the trend is for lower margins, more more affordable investment solutions. But to come back to your point about the speed at which the market is moving, I want to make a point to a new developing theory called the adaptive markets hypothesis, one that builds on the old efficient markets hypothesis, which basically allows for time-varying efficiency, which essentially means that in some periods the markets are efficient and some periods they're not. And you're likely to be better off going passive in times of tranquility, and you're likely to be better off in times of disturbance. And when the market's moving, it's volatile, active management can add value.
Which period are we in now?
Oh, what a question.
Disturbance.
Sorry?
Disturbance.
And probably for some time.
Yeah, so active is winning now.
Yeah, for the moment. Fascinating to watch it play out. Thank you very much indeed. Hlelo Giyose is the Chief Investment Officer and Principal at First Avenue Investment Management. François Smith is the Client Portfolio Analyst at Stonehage Fleming Investment Management on Investment School tonight.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
I get the sense that the story over the weekend, the South African kind of economy story, is going to be once again about the coalition and whether it will survive or not. And on balance, I would still say that the fundamental principles underpinning it, which is that the DA and the ANC both really kind of want to work together, sort of. And then I'll put in brackets, and neither wants to be blamed for the thing falling apart, might still keep them together in some way, shape or form. But there are certainly developments that I think are going to follow. I agree with what Dr. Ralph Matega said at the start of the show. I don't think the president will sort of give in to the DA's deadline of act against ANC ministers within 48 hours. That said, the DA is in a position where it cannot just tolerate this kind of action being taken either. Either way, it's going to be a very interesting time. We'll see you tomorrow. Good evening. It's 8 o'clock.